Hello, everyone. Welcome to episode 5 of Cosmic Collab. As always, I'm Olivier Tu, co-founder of Optimate, and today I am joined by Ravi Ravulaparty, co-founder and CEO of Qapita. Hi Ravi, welcome to today's session. Ravi is a lifelong learner. He's an entrepreneur. He's a team builder, and his mission is to help the next generation of bold startups succeed. A mission that I think we also share to a certain extent. So Ravi, to kick things off, maybe you can share a little bit about your background and your journey and what led you to doing what you currently do at Qapita.
Olivier, first of all, thanks for having me on the podcast, and it's exciting to be speaking to you today. Also, looking forward to a collab between Optimate and Qapita. So, my background, I was an engineer by training. I was a 201. I made a career in finance, therefore, and worked as an M&A banker for many years, close to 2 decades. I think 16 or 17 years as a banker. And largely working on mergers and acquisitions, capital raising for other entrepreneurs, later stage companies usually, or finding exits for entrepreneurs who build their businesses over many decades. And just before turning 40, a few months before turning 40, I decided it's time to take some risk and build towards a career 2.0 before you run out of insanity. So that's decided to start up.
Yeah, I think I can share that. I think in a way, we share similar backgrounds. I was also in corporate. I was a lawyer myself. Yes, and there's a little bit of a niche. I think we both probably had where like we would want to create something and build something. So yeah, I think that's something I share. Ravi, Qapita has been around for a short while now. Has made itself quite a name in the region in Asia as a cap table platform. But of course, you're working also on other verticals and expanding, whether it's in terms of products or regionally. But before we talk a little bit about that, I'd like to hear a little bit more about when you decided to co-found and start Qapita. What was really the insights on the market? What really prompted you guys to just launch that and get into that specific market?
My initial quest, Olivier, was to figure out how to automate private transactions. Can we make private transactions smoother, faster? And you've been a corporate lawyer yourself. You know the friction there is when someone is selling private market shares, for example, and the time it takes from price discovery to settlement to actual issuance of shares. It was a cumbersome process. So that was a problem we were chasing. And then two events happened in 2019. Both Silicon Valley and Wall Street started giving attention to the space. And the space they were looking at was not directly transactions related, but systems of record. And what I mean by that is, basically Morgan Stanley bought E-Trade, the brokerage business. Morgan Stanley also bought ShareWorks, which was a employee equity compensation records business. At the same time, Goldman Sachs and Andreessen Horowitz funded Carta, which was a giant. All these transactions happened in 2019. And I was working most of my career with cap tables for founders during due diligence, during transactions as a banker. And most of what I worked with was Excel spreadsheets. Many times you're searching for missing grant letters, missing share certificates. You know the drill. And that kind of was I wouldn't call it a light bulb moment, but that was a series of events which kind of catalyzed, okay, before you build a transactions platform, you need to build a system of record. And that system of record has to start with who owns what, and therefore cap tables and then employee equity as well.
So a small pivot into this. I think it's interesting that the initial idea to create efficiencies in transactions. I think ultimately we also thinking around these lines. So looking at legacy ways of doing things and how to speed up the process, make it more standardized, making it more efficient. Just to understand a bit more. So you got into that pivotal moment when you decide to get more into capital. You see an opportunity there. There's funding happening. Now from there to getting the first product out and getting your first traction. The meaningful traction. Maybe explain a little bit of journey. How did this go? How did you go to market and capture that market in a meaningful way?
We found what wouldn't work in this part of the world first, actually. So when we built a cap table module. We showed it to a bunch of investors. They all loved it because they all need transparency. They need records. They need systems. We showed it to a bunch of founders, and they said, "We don't need this. We won't pay for this. Why do you need a cap table? I look at my cap table once in a year. Why do I need a software to use my cap table? I don't need it." But the moment I cross 20 employees, they're coming and asking me, how much do I own of the company, what happens when I leave the company, how much have I earned, how much is vested, how much is unvested, what are the rules for exercise, all sorts of questions. And that's starting to get messy, and my Excel sheets starting to look complicated because employees come, employees go. I need to maintain records. And so they said, if you also build an ESOP management or an employee equity management module, that's interesting. We'll pay for that. So it's the other way around in other markets. For example, the US, you would lead with the cap table. Employee equity is also something you would add. There's a legal construct that's different in the US and this part of the world, which are largely based on English law systems. And so if you just built one part of the solution, it wouldn't work. You needed both to make it work. And even so, employee equity forms are lead. People also use the cap table. It's not, the cap table is not the lead into the company. So we had to go through this journey of learning, understanding behaviors, and so on before we found the fit. The initial few customers just came from founder hustle, just going to people we know and saying, "Hey, we built this product. I think it'll be useful to you. Can you try it for free? Just tell us if it works. Is it making your life easier?" And then in about 6 months or so, we got 20 beta customers. So not a big number. But that kind of, once there were 20 beta customers and then those people started saying, we'll pay for this product, is when the real traction, the funding came through. We could hire more people, we could build more features into the product, and then launch it.
Yeah, I think we'll deep dive on some of these topics, but coming back also to because again, your product is of course tech, right? So you come in with a product on the market, and I assume that first-time founders see the value a lot less than repeat founders, because repeat founders that have fundraised got into the mess of doing into due diligence and then getting their funding delayed because they didn't prepare for the cap table. That's the typical story. I know that also as a lawyer, because that's the same thing. Legal, having a shareholders agreement, having all the rights document in place since day one is typically not something people want to pay for when they just want to sell their product in the initial stages, and then discover that mistake a little bit later down the line. That applies as well to having proper accounts, cap table, the legal documentation. Now, you've highlighted probably your biggest competitor is not necessarily the other platform, but it's an Excel sheet, right? Or just a spreadsheet or Google sheet where people just put line after line. How is your product much easier to use? How is it more intuitive? Do you build modules? You are standardizing things, I assume, as well, like giving best practices to the founders, saying, look, this is how we suggest you to build your cap table, as opposed to try to be too creative and to be too differently from any other founders. How, maybe you can share a little bit how Qapita as a product is you differentiate yourself.
First is, initially when we started, we competed with Excel spreadsheets, but no idea remains a secret. And before we realized, actually, the global players in our space were in the same region. They also started expanding into the region. So sooner than later, we realized that our benchmark would be the globally best possible solutions, because software, yes, there is an element of localization required in the software, and we can talk about that. But independent of that, software is software, and therefore you have to be as good or better than the biggest players there are when you're building a software-led business. And so modern tech stack is modern software is all about experience. Actually, what differentiates you is whether you are giving a good experience to the customer, and the customer really cares about outcomes, doesn't care about features. Is my outcome achieved? Is it achieved fast enough? Is it achieved with a good experience? I think they just care about outcomes. So I think what we started looking at, what we really started building at, is whatever feature we introduce into the product, it's built in a way that the outcome is achieved for the customer, first and foremost the customer, and no one else. Actually, what any of us thinks, whether it's elegant or not, doesn't matter, as long as the customer feels it's an elegant solution. The second is that by definition, our product interacts with three legal systems in some sense: taxation law, company formation law, and securities law. All three, right? Ultimately, stock options turn into shares, which is securities. Stock compensation is a form of compensation, therefore taxation from an employee perspective. So localizing it to the markets we play in was essential, and was our first real differentiator from the global players. We knew what this market was, we knew what this market needed, and that's how we started. Over a period of time, we've built features that work in multiple markets and so on. But what the initial differentiator was that we understood a multi-jurisdictional nature. If you're building a business in Singapore, it's very likely you have employees in India. It's very likely you have employees in Indonesia. It may be possible you have employees in Vietnam or Malaysia. So, it's especially if you're building a venture-funded, large, scalable business out of Singapore, you're going to build it across jurisdictions, and therefore, by definition, from the very start, we had to build for a product that works across multiple jurisdictions and localized in each jurisdiction. And the last component is, like I said, it's not a product differentiator, but how we differentiate ourselves as a business. We also provide what I think is an exceptional service layer over and above our customers, our competitors. And that's not really a product feature, because ultimately, I said, customers care about outcomes. They don't care about product. And as long as your business is delivering your outcome in a seamless way, in a timely manner, then you're successful. So those are the three differentiators: a modern tech stack leading to experience, multi-jurisdictional, and then service layer.
Interesting. So still the servicing layer, I would say the personal aspect, some element of customization really still required, particularly in this market, in the region where I think that there's still a certain journey towards standardization, and I think the market understanding exactly what is a standard for I would say an early stage startup. You talked a little bit about it. Can you elaborate a little bit more on your fundraising journey? How it started. So you were talking about 2019. A lot of funding in this space. I assume you got a little bit of traction there. And since, how's the journey been? But also share a little bit about your very early days of fundraising. Whom you raised from? Was it angels? Was it immediately a strategic investor, and so on and so forth?
So we were lucky in the sense that I had a finance background. I was a banker. I was working with many investors, so I knew most of the investors by name or by in person. And so reaching out or getting to the right investors was not the problem. What was interesting about my fundraise was that the investors who I thought would back our idea didn't back the idea, but investors who did not actually give a chance to back the idea ended up backing the idea. But overall, on the fundraise journey, I should think we've been fairly lucky. It's also kind of all of us three founders worked in the industry for a while, knew people, and therefore the trust and connections that we needed to kind of kick off that fundraise journey was there. But I always felt fundraising is about two things, actually, and they need to go hand in hand. People tend to think one is enough or one of the two is enough. It's not true. It's numbers with narrative or storytelling with data, both at every stage of the company. It's actually making the numbers tell the story. And so storytelling is as equally important as data. And so because I was a M&A banker and I was helping people capital raise, this was almost an unwritten rule in my industry, and like how you would help any company raise capital, because the entrepreneur would know the business better than anyone else. So if you had to go and add value, you had to take some formula to the table, and this was the formula. So so telling the true story with data and numbers was the key, and we used that to raise the initial round from angels, all who had known us as a professional and during my career, but we're also lucky to get an institutional check right in the seed round. So our seed round was an institutional check plus a bunch of angels, which meant that angels, help open doors initially, build the network, and form an extended team. The institution gave the discipline to be ready for the next round and get prepared for the next round, and also support the next round. So getting an institutional investor early meant that we could raise subsequent rounds of capital as well. But we also had, ours is a cap table business. It's the startup ecosystem. Getting as many angels supporting us was also going to be critical, especially what we didn't realize at the time, that we take on the big players from the world in the market. And so we had to get up.
I want to follow up on one thing, right? And maybe having your thoughts on, of course, your team looks a lot of cap tables and sort out some of the issues surrounding simplification there. How do you see the role of angel investors, in Southeast Asia particularly? Is it evolving? Do we see more and more of that? Is it always the same individuals that we see, or is it something that's a trend? Seeing more angel investors investing either alone, either as a syndicate in the region?
Oh, it's definitely increasing. I think the overall ecosystem, like I started my career, like if you're talking about Southeast Asia specifically, Olivia?
Asia, Southeast Asia in general. I mean, you have a big presence also in India. I'd be happy to hear a little bit about that as well.
Yeah, so it is increased substantially in both markets, India and Southeast Asia. India is like is really like on a rocket ship in terms of angel activities, syndicate formations, startup ecosystem in general, much bigger market than Southeast Asia, and Southeast Asia is also pretty strong. So if you look at it from a decade ago, there's substantially higher amount of activity in both the markets. It's actually, these are what I think will be the next two biggest startup markets, India and Southeast Asia. The demographics plays into it, the GDP per capita equation plays into it, digitalization is playing into that factor. So these are secular factors. Both of them are growing very, very fast. Between the two markets, India has a bigger size and growing slightly faster than this region, but that's the difference.
So I'm very interesting in this. How do you go about with your growth? So you explained that a big part of how Qapita is positioning itself, these three main elements, competitive advantages. How do you go about with marketing and growing the company? So is it on a very focused strategy on one product, or you go about with different angles? I'd be happy to hear how currently Qapita is positioning itself in terms of marketing and growth.
There are online platforms which compare products like a product hunt or G2. For example, if you look at G2, Qapita is ranked number one globally on G2, ahead of all of the big players in our space, including those products which are owned by the largest financial institutions in the world. But the factor is that no one in this part of the world looked at G2 before they picked a solution. They usually asked someone else, what do you use for this solution? And so it was important for us to build some champion customers who would refer us to others. There's an age-old saying about ICP and the persona buying your product. Figure out where these people hang out, and you hang out at the same place. We figured they hang out in WhatsApp groups. So there's WhatsApp groups of CFOs, there's WhatsApp group of CHROs. And if a CHRO likes our product and he recommends it to another CHRO in a WhatsApp group that they have, it's likely that they'll use our product. So what led to the best marketing tool apart from LinkedIn for us has been actually WhatsApp groups and partnerships. So having people who recommended your product, who championed you, and working with partners at events. Before the start of the podcast, we were talking about the events we are having. During this week, most of them are done with partners. We almost never do any event alone. We almost always work with partners. Partners recommend us to customers. Customers recommend us to customers. So that's been the marketing journey for this part of the world.
I think that's right. I mean, we use a lot of LinkedIn, and I think what you have been doing a lot more is trying to be building a community to a certain extent of startup founders, getting really involved as an actor in the ecosystem, and I think that's the way to go about it. But you're right; it's always multi-pronged marketing, right? You cannot just rely on one aspect, because people see you at an event, they see the brand, but they also see an ad, and they also do check, and that's how it really conflates. And sometimes you need a mix of all of that. I mean, that's basic advertising, I would say. So certainly, but of course, it's if you've got resources, it's a good thing. I want to switch gears a little bit and talk more about hiring and culture. Of course, you've built big teams. You've got and of course there's different verticals now within Qapita, different markets. This is always a struggle, right? I mean, Qapita is also involved in ESOPs, helps providing trainings and understanding along those lines. Hiring top talent is hard, right? And it's particularly hard also when you do this, and you hinted at it. If you're a Singapore-based startup, you will have teams who are in other jurisdictions. There's maybe some elements of work from home or not, depending on how big you are, and we've got offices in every country. What has been your experience, generally speaking, and do you have a few, insights in building these teams? What would you advise, I would say, an early stage startup to do and avoid doing when it comes to hiring talent and building a culture within the firm?
Yeah, I mean, first thing is we have to walk the talk. So every employee gets in Qapita has a share of, or as a partial owner of the business, gets some equity in the business. We evangelize this for the ecosystem in general, and so we have to walk the talk. So that's the first. I read somewhere that employees think about compensation, investors think about returns, owners think about contribution. And I thought that was a very interesting line. So if you want everyone to think like owners, then you have to give them a piece of the ownership. So that is first. The second is what has generally worked for us. We've had touch wood, relatively low attrition compared to some of the startups we see in the market, and we think what has worked in our favor is just being transparent. I don't think the problems or issues are as equally shared with the team as are the successes and and the good things. So we try to keep that transparency uh, all along, from getting the first few hires to when we are a larger team today, and expanding the team. And we, like I said, by definition, we work across the borders. So we have teams in remote places. And so when you're trying to build a culture, when you can't really experience it in person, it has to be demonstrated by activity. And so for us, the equity and transparency have been the two kind of arrows, two kind of for hiring and for retention. Um, yeah, I think that was it. One of the other things we emphasize is you have to learn as a startup. So if you haven't picked up a new skill, you haven't actually significantly grown in your own capabilities and skills over a 12-month period, there's a problem, which means either you're not being empowered sufficiently, or you're not you know the team or the organization is not facilitating enough learning for you. So that's a simple measure. Anyone can measure it. You can see how much better you are than this year than you were last year. So not difficult. In fact, it's more or less a quarterly thing. It's not even an annual thing. So we put a significant emphasis on learning. You'll be surprised how many more people would like to invest in development rather than just pay or bonuses or the financial remuneration aspects. So these are things that have worked for us.
Okay, so
Yeah.
Qapita, maybe just share a little bit about your future milestones, what's coming up, anything exciting you can announce. And I'm not seeking for exclusivity here, but just happy to hear what's in the works for 2025, for instance, what's keeping you busy, also at the top on a day-to-day, but basis.
So we are expanding both on the product front and on the market front. So US market expansion will be a big bet for 2025. So we've already made some inroads in 2024. So not starting off from zero. So we'll have a presence in the US. We've just opened a small office in the Bay Area. So we will be adding to our presence in starting with the west coast of the US, but we'll expand into the US with our core product. So that's a geographic expansion, market expansion, new market entry. On the product side, we're looking at adjacent product feature builds. Hopefully, our next one will be closer to a fund administration type of product, and that we would think we should be able to launch that in also tailored towards the US market. And that should be also launched in 2025. We are expecting a license from to conduct some regulated activity in Southeast Asia. So that should form a part of our growth strategy in 2025.
That's pretty exciting. Yes, I think we share that opinion that fund type of services, which are getting a little bit higher in the value chain, I would say, because of course you'll be tackling initially. So it's the only natural progression. Of course, some other platforms have gone that way as well. So I think yes, that there is a big market, huge market actually, and it's prime for disruption, because the legacy solutions are still extremely manual, extremely slow, and not very efficient. And clients pay a lot of money for something that's not particularly very efficient. So I think that's something all of us have a role to play in trying to change that. Okay, thank you very much, Ravi, for sharing all of this. It's very insightful to hear your journey. Do you want to add anything relating to Qapita? How should people reach out to you, or who should they contact if they are interested in knowing a little bit more about your products?
Yeah, just you can write to me at ravi@qapita.com. That's qapita.com. That's on the screen as well. So that's my email address. Easiest way to contact me. Anything to do with equity in your business. If you're a startup founder, just reach out to us. If you want to talk about anything, all equity related matters, you can reach out to us. There are, of course, we're happy to collaborate with Optimate. So if there's company formation involved, or raising from a syndicate involved, please do. We would be happy to collaborate with you as well, your team, Olivia. And this has been great. Thanks for having me on this podcast.
Yeah, thank you, everyone. Thanks to Ravi for joining us again, and I wish you all a good day ahead. Bye, Ravi.
Thank you.